It's good to have your company here on Business Now. Now, I'm not sure if you've spotted this, but Bitcoin is back big time. Since late last year, it's roared back to life. In the first 2 months of this year, just 2 months, it's up by 42%. Right now, and we'll see this shortly, it's sitting around 63,000 US dollars per Bitcoin. It's now within 10% of its all-time high, which is just below 69,000 US. Pav Hundal is the lead market analyst at the digital currency exchange Swyftx, and he joins me now from Brisbane. Many thanks for your time, Pav. Just the driving forces, because it's been so volatile, a lot of people perhaps have just missed this because they've lost the appetite for cryptocurrency. What's driving this increase?
Yeah, Bitcoin is flying. Look, it's definitely been, I guess what we're not used to in this space is a non-retail driven demand complex. And that, I guess that's what we're sort of seeing unfold right now, in my opinion. You know, the advent of exchange traded products in the US, such as by the likes of BlackRock, Fidelity, you know, household names, household brands, they're bringing Bitcoin, I guess, to its next wave of adoption. And, you know, this is something our industry hasn't really seen in this, I guess, velocity before. So I think that's essentially what we're seeing, a pure supply versus demand complex that's just never been priced in before.
Yeah, I'm just having a look at the chart here. 3 months up 64%, now sitting at 62,150 as we speak. It is a bit nuts compared with where it was last year, when it really did fall apart, when the whole FTX drama was being played out. So, you know, and Coinbase as well was there. So just explain the ETFs. They took a long time to get the necessarily regulations from the US regulators, didn't they? And this is part of the reason why it's almost been a pent-up demand for those types of products when people want to play in the crypto space.
You're absolutely right. I mean, the actual exposure to, you know, not a derivative form of Bitcoin has been long sought after by, you know, numerous entities, institutions, even I guess some forms of retail clients haven't been able to access it, just due to the complexities around having a digital currency. It really can be a bit troublesome to get exposure to. So, you know, with the advent of, you know, issues like you mentioned, FTX, a couple of bad players in the space, we really did see the industry take a bit of a reshaping. And I guess what's emerged out of that is, you know, a bit of a victory for, you know, the consumer in the end of the day. I mean, we've seen the SEC, the Securities and Exchange Commission in the US, go backwards and forwards around how they wanted to sort of package these products. You know, we've come only a few months down, not even a month down the track of the official listing of these products. And we're seeing it rank in the top 10 in terms of volume when it comes to, you know, stocks traded on these exchanges. The demand, I think, is something that, you know, while we all anticipated it was going to be there, I just don't think anyone expected the velocity and the momentum that we're seeing right now. I think even just yesterday we saw the biggest inflows for Bitcoin from the BlackRock product, which has been leading the charge at the moment.
I was going to explain, so we need
to see.
Yeah, so Pav, we need to explain something to people, and that is that if, say, for example, I don't know, BlackRock or Fidelity, as you mentioned, if they have an ETF over the Australian Stock Exchange, they have to buy those shares to replicate the index that they're basically tracking. So that's it. So they buy BHP and they buy the Commonwealth Bank, they buy CSL. But if they buy Bitcoin, have a Bitcoin ETF, they have to buy Bitcoin. So they now have more than 110,000 Bitcoins, as we said, the best part of $62,000, $63,000 US a piece. They hold more than, $1 billion worth of Bitcoin. So, you know, we're talking large scales of money coming in to follow that cryptocurrency market.
That's correct. Absolutely. It's just unprecedented, I guess. Even historically, what we saw from institutional demand, we've already eclipsed the 2021 cycle within a couple of weeks. It's been quite astonishing.
So then take me to the other end of the scale. Because Bitcoin is a finite resource, you can't just keep on printing Bitcoin. The fact of the matter is that any demand for that drives up the price like this. To go and find more Bitcoin means you've got to mine, which means you need electricity and energy, cheap electricity and energy. That's the harder part of this deal, isn't it?
That's correct. And there is a bit of a race in the States specifically around the mining complex, like who can, I guess, derive the most efficient, new coins, because there is only a set amount that can be produced. And as you sort of alluded to, you know, if there's this certain amount of uptake in buying, but there's only so much being produced, you know, this is where that sort of supply shock factor really comes in. And I think even that we're still just starting to feel the tremors of what that's going to feel like in the near future as well.
I'll tell you, Pav Hundal from Swyftx, many thanks for the explanation today. It really has been an astonishing ride. As you say, you reckon it just might only be at the start. Thanks for your time today.